Assets put money in your pocket. Can we agree on that? Liabilities take money out of your pocket. Can we agree on that? Where are your assets right now? When you look at your income, that's in a taxable pay bucket now. If you look at your investment accounts, that's in a taxable bucket pay now. See, what we want to try to do is change mindset. That's all we're looking to do. I want to help you understand what I do. And the most important thing that I can do for you today is to help you be more tax efficient than you were yesterday. Does that make sense? Because it's not just about life insurance planning, it's about mindset, and it's about where are my assets right now, how are they going to be taxed today, tomorrow, or down the road. So if your planning is all in the taxable now bucket, then we got to start moving you a little bit more to the right. Either pay the tax later or never pay tax, because we all agreed, right? We all want to work in the never pay tax bucket. What I want you guys to do today is to start listing where your assets are. You don't have to do it now. This is your homework assignment. And you will see that in your own finances, you've been putting money in places that are not as tax efficient as places I can show or recommend to you at some point. Does that make sense? Is that fair? How does life insurance work? Does anybody know? Besides Wendy, because she was a life insurance agent. How does life insurance work? Anybody know? Well, let's start this way. Just by a show of hands, who in this room already has life insurance? Every hand should go up. And if not, my question is, why not? Why and why not? Maybe you haven't met the right person yet. I'm going to introduce you to that guy. Hold on 1 second. Andrew, please stand up. Thank you. Okay? Here I am. I'm your life insurance guy. But I do other stuff too. I help people leave legacies. I help people plan for their children's education. And I can see, are there any grandparents in the room? We also help with grandchildren's education as well. Did you know today, okay, that you can give over $17,000 away to your children and your grandchildren? They don't have to pay tax on the money, although you don't get a tax deduction. It's part of your lifetime exemption, which is about $5 million today. And what are they trying to do? In 2025, the end of this year, the tax break that you guys have had from 2017 for 8 years, that's going to sunset. Now, I asked, does anybody know how life insurance works? Pay premium. I heard pay premium. Who said that? Oh, okay. Okay. You're on the right track. Yep. So we take a premium, which is that monthly thing or annual thing or quarterly or semi-annual, depending on how you pay. We put it in a pool with other people. Okay. We take that money and we invest it wisely in long-term bonds, 30 plus years, getting some kind of interest rate on it. And then in that pool of people, if a person passes away, we have enough money to pay those claims. Now, I never spoke about the company, and I want to do that because I think it's important to understand. There's two things that most people, when they come to us, they want to know. What's the name of the company that they're going to be working with, or the carrier, if you want to call it carrier, or the agent. Well, you know a little bit about me, but you don't know much about the insurance company that I represent. New York Life started in 1845. That's 179 years ago. And we are a mutually owned company, which means we don't trade on the stock market. We're privately owned. So when you buy a product from us, you become a shareholder in the company. When that happens, we give you back what's called a dividend in your policy. Dividend is a return of that premium. New York Life this year for 2024 will pay out, are you ready for this? Drum roll. $2,200,000. So that's 2.2 billion with a B back to our policyholders. That is 200 million more than we paid last year and 300 million more than we paid the year before. So when you look at a large financial institution like New York Life, you say, well, tell me a little bit about the company. I try to describe it in 3 words. We're big, we're old, and we're doing great. And people during pandemics and during stock market crashes, they fly to safety. They go to safety because they're looking for safe companies to put their money. Now, I can't stand here and tell you that has New York Life paid out any monies when the market crashed? Yes, we lost a little bit of money. 300 million, to us it was a rounding error. When you compare that to a 700 billion with a B in total assets. So at the end of the day, the most important thing we can do here today is to provide information, provide an education, and help a person understand what we do and the way we can do things. Now, I'm not a cookie cutter approach, and that just means that each person has their own individual financial goals, their own individual financial objectives, and it's my job to take in information, right? I have to understand where you are today, right? And where you'd like to be, just like in any arena. Once we figure that out, then we'll ask you questions designed to help you understand your financial situation and work together to design a plan, provide the solution. So when I had given Jay my bio before, one of my mottos, which is up in my office in Staten Island, it says advice, solutions, and peace of mind. Because when I ask the question, what is life insurance? Life insurance is a piece of paper with some lines on it and a promise from the company to pay at some point in time. And that could be tomorrow, that could be 50 years from now. But all you're really buying is peace of mind. Can we agree on that? It's peace of mind, knowing that if I go to sleep tonight and I don't wake up tomorrow morning, that my affairs are in order, that little Johnny and little Susie are still going to be able to eat. The mortgage is still going to get paid. The educational plans that we made, they're still going to happen. The automobile loan, that's still going to get paid. We're still going to be able to live in this house, put food on the table, and things like that. So at the end of the day, you're buying peace of mind. And I hope today that I gave you guys some peace of mind, but more importantly, a place to go to understand your own position financially and how we can help move you, empower you to move you to what I like to call financial independence. What I like to call, I have enough money to take care of my family, my assets, retire successfully. So I'll leave you with one more thought. There are 3 things that clients, prospective clients, come to me for. One, they want to protect their family. Two, they want to help to educate their children. And three, they want to retire successfully. Of those three, which ones do you not want? That's a question you want to ask yourself. And if you meet with me, we'll be able to determine best course of action and take you through a process, my process, that I've developed over the last 20 years, that I have 1,500 clients that rely on me on a daily basis to help move them into their place in their own world and the financial protection and needs that they want to have. And before I asked you if everybody wants to be a millionaire, not everybody wants to be a millionaire. Some people are just happy with paying their bills and riding along. And then I have other people that they want to continue to move up and move up and move up. But wherever you are now, financially, versus wherever you want to be financially, we're going to help you. And one last thought. I have clients that make $30,000 a year, but I also have clients that are worth $50 million. And anywhere across that spectrum, that's a large spectrum of different types of people and different types of businesses and stuff like that. We can help anyone that comes across our table, but you have to take the first step. So my offer to you is a free consultation. If you haven't signed one of those cards, I recommend you sign the card. If you're tech savvy, I have these Popple. It's called Popple. It's an electronic business card. You can just scan your phone on it and put your information in, and I'll get an electronic ding. And with that, I'll ask if anybody has any questions for me.
Because,
Observation, okay?
well, question. I know that from my experience that the older you get, is the more expensive your insurance premium will be.
Okay.
Can you speak to that a little bit?
Well, everything that we do, right, it's called risk pooling, right? So it's based upon the person's age, based upon their gender, and their overall health, okay? So if I side by side, right, age 0 to 80, right, if we put that together, and I side by side a 25-year-old buying the same program that a 50-year-old would buy, the 50-year-old would have to pay a higher premium because the 50-year-old is closer to life expectancy versus the 25-year-old. Now, that being said, I know we all experienced the COVID, and during COVID, I had some groupings of people that weren't expected to have mortality, but died during the course of the pandemic, which kind of skewed a little bit our mortality tables, but we were able to do things and pay those claims in a timely fashion. So it's really based upon your age. But I've seen some 25-year-olds less healthy as some of my 50 and 60-year-olds. So, but they still will pay a higher premium based upon age, everything else being equal. Yes. I told you this is my favorite student right here.
Okay, you spoke about life expectancy age.
Yeah.
What is that age that New York Life Insurance works with? That one question.
So we can go from age 80, age 0 to about 80. You know, when we look at higher ages, well, we can go to 85 or sometimes 90. The life expectancy on our products, certain products, the person is phased out of based upon their age. But if you're asking me about specific life expectancy, like how long can I expect to live, Is that the question?
No, I'm
You
asking
wanna
the
know about the
question based on
products.
on the product because, for
Got you.
example, yeah, because you said based on the age, your premium differs.
Correct.
So I need to know what is the life expectancy that your insurance company works with in
So-
determining the premium.
So some products, you can go to 80, some products can go to 85, and some can go to 90, depending on the product.
Okay, I got you. The other question is, you talk about investments. So you collect our premium, our hard-earned money, and I'm trying to figure out where do you invest those monies that you're collecting?
So I mentioned that before.
said
On a
bonds.
traditional product, let's say a whole life policy, we're taking that and we're buying what's called a long-term AAA rated bond, okay? And the reason why we do that is because if you passed away tomorrow, you want to make sure your family gets that money. So we're not taking your money and putting it into the stock market. Your money gets invested into the New York Life general account, which currently has about $500 billion. And then we take that and we buy 30-year and 40-year long-term AAA graded bonds because we know over time those bonds are going to continue to pay whatever that interest rate is to back up your life insurance policy.
Okay, so based on the product, then you have different, or you have a diversity of investments for those funds. Okay.
So if you're talking about traditional products, right, and that's all we're talking about today, it's not an investment presentation. Every dollar that comes in on a traditional life policy, that could be a term life, it could be a whole life, or any one of our suite of products of universal life. Those monies get invested in AAA grade bonds, 30 plus bonds, 30-year plus bonds to back up those contracts. Because we don't know if a person's going to die tomorrow or 50 years from now, but we still have to have that money set aside. There's one note I want you to understand as well. When you talk about strength of companies, New York Life has a reserve account just in case, which is over $30 billion. That reserve account is designed just in case we have a higher mortality than we expect. Because think about the pandemic, right? That gave New York Life, we paid out about $30 billion more than we expected to pay over that threshold. And we pay on an average each year between $5 and $7 billion back to policyholders. Now, those policies could have been written back in the 50s or 60s. Okay, I don't want to get so into the weeds micro on it, but at the end of the day, having a $30 billion cash reserve lets us feel good that if we find a business opportunity, we're going to take advantage of it. If we have an undue mortality risk, that allows us to continue to thrive and not have to worry, can we pay every single claim? $30 billion in reserve is the largest in the industry. And if you take the next 10 companies underneath New York Life, we are the number one. Their cash reserve does not equal that. On top of that, we have a grade of 100 when it comes to a Condex number, where any company under us is either 98 or below. So in your experience, right, would you want to work with a company that has AAA rated with 100 across the board, or would you want to work with a company that doesn't have AAA rated and doesn't have 100? 100 is perfect.
One
Oh,
last
man.
question.
I love this girl.
One
You're gonna
last
come-
question,
I'm
you
going
know.
to get you a job. Don't worry. You're going to come work with me and Chad.
One last question. I mean, we all experience, you spoke about the pandemic and the amount of debt and the amount of monies that was paid out. And right now, the economy is very unstable.
Yeah.
Everything is uncertain.
Of course.
But
You
how
could
do you
walk across the street and something
exactly?
could happen.
But at this point now, taking out life insurance, I mean, what is the guarantee? How with the jobs uncertainty? How is how are people going to continue paying? What happens if they lose their job? And
Of course.
is there and another question too? Here in this church, you have most of the persons here are from the Caribbean.
Where?
From the Caribbean.
Yes.
You may have some people would have their loved ones back in the Caribbean. They may want to live as a beneficiary.
Yes.
The insurance company has a policy and paying out the life insurance to somebody in a different country.
Yes. So,
what is the policy? I think these are things we would want to know.
So for foreign residents, okay, let's say you live here as either a permanent resident, you're on a work visa, maybe you're here on a visa for student, or whatever, or a U.S. citizen. If you have people in other countries, doesn't matter where, they are considered a foreign resident. So if the person has an insurance policy in U.S. and they name those persons as beneficiaries, we will pay that claim to them. The only difference is they have to fill out a W-8 as a foreign resident, and at that point, they will pay some tax on that money. Does that make sense? So if you're a U.S. citizen, we can do business with you. Make sense? If you're a permanent resident, we can do business with you. If you're here on a visa, student visa, work visa, you have a work authorization, you have a tax ID, you have a social, we can do business with you, okay? And even I have scenarios where the person came here, they came here as a visitor, okay? They're working on getting their papers and whatever, naturalization, or whatever the case may be. We can still do business with them, okay? As long as they're good people. We only want good people. Good people have to help good people. That's why I'm here. I'm here because of Osmond. And he's my client because of somebody I knew 35 years ago that I did business with.
No, my concern is the beneficiary of that person who is in the U.S. That's my concern. Because I could be here and I take out my insurance policy and I die. My beneficiary is in a different country.
That's fine.
And they are not U.S. citizens, they are not naturalized. So would you contact that person in Guyana and make the payments to them?
So here's what
That's what I want to know.
Here's what we also do, okay? New York Life has a special team that if a person dies in a foreign country, okay, let's say they went to visit or they live, whatever, New York Life has a special team that will go out to those countries and verify that people die in India. New York Life sent there to the consulate, right, the Indian consulate. They sent people there as investigate to make sure that the person actually died in that country. Because if you die in a foreign land and you have a United States, you're a U.S. citizen or permanent resident, and you have a New York Life policy, you die in a foreign country, you have to make sure that you died. So we're going to send an advisor. It's the same thing for beneficiaries. I've had beneficiaries that lived in other countries, and New York Life secured their information. They had them fill out the W-8 foreign resident filing form, and they paid the claim. Here's what I'll tell you, Wendy. I know you have a lot of questions. You have probably seen a lot of hanky-panky stuff go on, okay? But when I put my head on the pillow at night and you're working with me, I know that I am client-focused and I'm going to do what's in your best interest. Listen, I'm doing this such a long time that if I don't work anymore, my family is still all set. But at this point in my career, I'm trying to give more back than someone's trying to give to me. Because I feel that I've reached a pinnacle in my career, and while I still love what I do, I don't have to go to work today if I don't want to. But I choose to because there's so many people out there that need our help that don't know where to go because there's so many people out there trying to take a person's money, and all we're trying to do is spread the word, hey, there's some good stuff going on. I just want a person to have an open mind when I meet with them, okay? I want to understand what their concerns are. You know, what keeps you up at night? What are the things that keep you up at night? Is it, how am I going to pay my mortgage? How am I going to pay my rent? How am I going to do this? How am I going to do that? If those are concerns, those are real concerns. Let's try to figure out a strategy to help you figure out what the most important thing is to you. What are your most important financial goals? And then let's put that on paper and let's prioritize. And if you have 3, 5, 10 things that you want to do, we've got to put them in some kind of order. What's the most important thing you want to do now? What's the second most important thing? See, from my experience, there are a lot of good people in this room. You're giving me your time tonight. You could be doing something else. What that is, I don't know. And I could be doing something else as well, but I felt that for Osmond, it was so important, and for Pastor Andrew, it was so important for me to come here and just give you some good information, help you meet some good people. And at the end of the day, hopefully, and I promised the other gals in the back too, I said, I promise I'll leave you better than I found you. And if that's just educating you on what I do, then I accomplished what I set out to do. You have a question?
I have 2 questions. What's the difference between like full life and term life, this kind of thing, insurance?
Yeah.
And what or who determines which one you should use?
So, good question, right? So, people hear about term or temporary, people hear about whole life or permanent. Term and temporary are the same thing, permanent and whole life is the same thing. So, when I meet with a young family just starting out, maybe mom and dad are both working, maybe they have 1 or 2 children, they got a mortgage, they pay high rent, they're like, we have a very small budget. You know what? Let's get some term insurance. Let's cover your basic need right now. Because if you died last night, the question is there a financial hardship in this household today? And most times that answer is a yes, because they haven't done the planning yet. Now, as you start going through life, right, you build what's called financial capital. You start savings, investments, maybe you have a pension with your job, maybe you have a 401k or a 403b, whatever, okay? But your financial capital hasn't caught up with your actual need. So there is a sweet spot where your financial capital and your assets catch up to one another. But that could take 20, 30, or 40 years down the road. So for young families, I always recommend buy $1 million worth of term. It's very cheap. And plus, you're so young, you'll get the best rate. But as time goes on, what we'll do is we'll start implementing some permanent insurance so you could build cash value, because the term is going to expire at some point. Term has its need, but sometimes it's good for 10 years, sometimes it's good for 15, sometimes it's good for 20. We don't know. But we don't ever want you to outlive your insurance, so it's just a temporary fix for a permanent problem. If I slice my vein open, you guys come running and put a Band-Aid on it. That's not fixing the problem. I need to go to the doctor and get some stitches. So the term is the Band-Aid, the whole life is getting the stitches. We all have a problem with insurance, okay? Because we're all, 2 out of 2 people will die in this room today. Every 2 out of 2 will die at some point. We don't know when, we don't know how. Point is, if I have something, right, in place, it's better to have it than not need it, okay? Or to need it or not qualify for it, because you still have to qualify medically and financially for insurance. So the older you are, by the time you're 50 or older, you should have about 70% of your total insurance in permanent life insurance. By the time you're 60 in your 70s, you shouldn't have any term insurance. And I still get people in their 60s wanting to buy term because I can't break through their mindset to help them understand they have a permanent problem. They think the problem's only temporary. And then they come back 10 years later, why don't you tell me to buy the permanent? I said, here's my notes. We talked about this 10 years ago. Oh, what do we do now? Now you got to buy it, but guess what? You're 10 years older, and now you're on blood pressure. Now you're diabetic. Now you're overweight. Now you're this. Now you're that. I can't fix mindset. I just want open minds, because at the end of the day, I'll be able to put more on your table than you'll ever be able to put on mine. But I learned I help more people. The more people I help, the more I get helped as well in the process.
Two questions. Can a person
They're
have,
$1 a question, but I'll give them to you for free today.
can a person have more than one life insurance?
Sure. So when we look at a person's what we call replacement value, I'll give you an example. Who here drives an automobile? You have automobile insurance? To replace the value of that automobile. So if your 2020 automobile, somehow something happened to you, the insurance company comes back and says, hey, you want to replace the equal value, or would you be happy driving an old rusty Volkswagen? Right? See my point? Replacement value is what you're worth today. So if you make an income of $100,000 a year and you plan on working another 15 or 20 years, you're worth that amount of money to your family alive. So if you already have an insurance policy, you've already taken the first step to financial security. But they will never let you overinsure yourself. It'll be based upon your finances and the current insurance that you have in place, if you plan on keeping it. Where's the second question?
Second question, can you take the life insurance for someone, and then who does that money goes to should something happen?
So that talks to what we call insurable interest, okay? And insurable interest is, I'm married, children, okay? I could buy a policy on myself, I could buy a policy on my spouse, I could buy a policy on my children, because there's what's called insurable interest. I have an insurable interest in their life and death. Does that make sense? Let's say I'm a business owner and I have a partner. There's an insurable interest there as well because we're both running the business. But if a person walked through this door and I said, I want to buy an insurance policy on you, okay, and I want to be the owner, there's no insurable interest. So let's think of it this way. Mother, father, okay, sister, brother, children, grandchildren, could be nieces or uncles and stuff like that. I get some family structures where Mary's living with the uncle and she wants to make sure that if anything happens, there's insurable interest, okay? But it can't just be a stranger. That talks to what we call stranger-owned life insurance, which I don't promote. There are some companies that do. I do not do that. If you came to me and I can't determine insurable interest, I'm probably going to walk away from that sale, okay? Because my licenses and credentials and my 20-year track record with no compliance issues is more important to me than making that sale, whatever it could be. So if somebody sold you a policy that it's a little hanky-panky, I would review that just to make sure that if anything does happen, that they actually are going to pay a claim.
And does the person have to know?
Oh, absolutely they do.
What do you do?
Yeah, because today we have to interview the owner who's going to own the policy. We also have to interview the insured so that person knows that someone's buying a policy and they have to sign off on it. A thing happened many years ago. Something must have happened with somebody else. But what I'm trying to help you guys understand is that many years ago there was a bunch of things going on in the industry, what they called stranger-owned life insurance, and where investor-owned life insurance, people will call up and say, hey, I see you have $1 million policy on yourself. We'll take over the premiums for you, okay? But we are going to be your beneficiary. Like, that talks to the most scamish thing that you ever want, because I'm walking down the street thinking I'm good, and I get hit by a car, and then the insurance goes to this person that I don't even know who it is. So, but we try to do everything. You see where I'm talking above the table? There's nothing going on underneath the table, okay? Come on. You're neck and neck with Wendy.
You mentioned universal insurance, and that's the insurance a lot of people don't know about. Could you explain that a little?
Yeah, so in the booklet here, on the left side, right, I gave you guys some information. So when you look at universal life, you want to look at it as kind of like a hybrid kind of program. And it's designed for people that are older versus people that are younger. And because when you get older, the premiums sometimes for a whole life policy are unaffordable, but then you can't buy the term. So we built a hybrid model, which is kind of like a term policy. It's built on a term chassis with the accumulation feature of a whole life policy. And generally, premiums are a little bit lower, but it allows the person to have permanent life insurance to last either 20 years or age 85 or age 90 or even 100. Today, the mortality tables go to 121 because people are living longer. And, you know, there will be probably a point in time that they will continue to change those tables. When I first started, you could buy a policy, and if you hit age 100, they would actually pay you the policy. It's called an endowment policy. They would give you, because let's say you bought a $100,000 policy when you were 50, the cash value in the policy would be worth $100,000 at age 100. So they would actually give you the policy back, and the policy would end.
Oh, the reason I asked that, right, is like as you age, it is harder.
Sure.
So there was a time when I have universal life because I had to, I wanted some more insurance.
Good.
But you don't hear about it a lot.
You don't hear what?
You don't hear about it because I was surprised when I heard you talk about universal life.
Well, I do, because
Yeah.
it's really, the platform really covers those three products, right?
Yeah.
Term, universal, and whole.
Yeah.
Most people hear about term, they hear about whole life. But I really try to reserve universal for older people. That's why it's important when I when I sit down with someone and I do their fact find, or what they call discovery, right? The first meeting is designed to tell me what's keeping you up at night. What can I do to understand your financial situation? What are your objectives, that you're looking to accomplish? So then we determine based upon a need, a want, right? Needs and wants. And then we determine what's your monthly budget or annual budget. And then how much of this do you want to keep as permanent insurance? So there's ways to do this the right way. It isn't like when I look at a person say, oh, you know what? You're worth $100,000. Write up $100,000. Well, some people will come to me and say, I want a $100,000 policy. I'm like, okay, how'd you get that number? Just sounds good. Where did you get it? What helped you determine that's your number? Like, most people have $100,000 in insurance and they're like, whoo, I'm all set. And then they pass away, and then if their income is $50,000 a year, they don't plan on being dead for more than 2 years, right? They have to come back from the dead and start working again, right? I'm making a joke, but like, this is the mindset that people don't understand what insurance is. And there's so many bad insurance people out there, and I'm not going to name companies or names, that are not giving people the right information. And then a person walks away from that meeting and like, whoo, I'm all set. And they're not. So. John's got a question.
I noticed there's a trend that when someone asks a question, they usually ask two. So I'm gonna ask two questions as well.
They're two for $1. Who's collecting the dollars here for me? Where's my collection basket? It's the tax now, tax later, or never tax.
My first question, I'm not sure if you answered this one already, but my first question is, what happens if you have a policy and for whatever reason you might have lost your job and you're unable to pay it? what happens? Does the policy have like you can put it on pause? Is that like an option?
So depending on the policy, right, there are a couple of, I'll talk just to a whole life policy. There are some, what we call non-forfeiture options. Okay, one of them is you can do a reduced paid up policy. So let's say you had 100,000, lost your job, can't pay the premium. The company can run a calculation based upon how much you've put into the policy already and give you what's called a reduced benefit amount while capitalizing on the cash, keeping the cash in the policy. Another feature is they could do you can terminate the policy by cashing it in, okay? Another way to do it is you can put it on what's called term extension, okay? So it really depends on the actual policy. A lot of the clients that I work with, if they run into, see, everybody wants to be around when good things are happening, right? But when bad things are happening, they want to run away. So my clients already know if they're running into trouble financially, we have to start reducing things because the first thing to go when a person loses their job is they give up their insurance, which is the most important thing to keep versus, but it's again, it's a mindset because people say, I can give up this. They won't give up their cell phone, okay? Think about this. You leave your house, okay? You're driving down the road and you say, oh, I got my phone. I go back, right? But if you get down the road and you left your wallet home, you keep going. Like, think about like the mindset. Think about that, right? Okay? Some people leave their kids in the car and they go to work. Like, how do you leave your kids in the car? But the point I was trying to make is that it's all about mindset. So if you lose your job, it's even more important for you to have the insurance because God forbid something happens to you, you don't have no job, and now you just passed away, and now your family doesn't get anything. So if it's like a term policy, maybe they give you 90 days to pay the premium, but it really depends on the specific situation. But there are some options if a person loses their job to put things on hold. What's your second question?
And my second question is, I've heard this term before with people saying you can borrow from your life insurance.
True.
And I don't understand it at all. So I want to know if you
Okay.
could break that down and explain
So let's
that.
go back to it's either whole life or universal, but I'll call it just a whole life. So as a person puts money in premium into their whole life, okay, they're building what's called tax-free cash. Now, you remember the bucket of never tax? So one of the living benefits of whole life is having access to that cash tax-free, okay? So let's say I have a $100,000 policy and I got $20,000 in cash in that policy. The roof leaks, the car breaks down, I got to do something, I want to go on an exotic trip, I got to pay something, whatever. You could borrow money out of the policy at a very fair interest rate. Right now it's about 5 or 5.5%. Now, while it does reduce the policy death benefit, and a lot of people say, well, why do I got to pay it back? And why does it do this? Because there's a tax benefit to owning life insurance. And the tax benefit is twofold with whole life. You've got a cash value, which is your living benefit, right? And your death benefit, which is your death benefit. See, remember earlier I said a lot of people buy insurance for what it is, right? It's life insurance. Somebody dies, somebody gets some money. I'm going to show you ways on how to buy it for what it does, how you can build an asset tax-free. If you go back to that folder, John, and you look in there, right, of the 3 buckets on the right-hand side, cash value life insurance is in that bucket, okay? It looks and smells like a Roth IRA, and I'm not going to get into retirement planning, but it looks and smells like a Roth because it's after-tax dollars, grows deferred, and you could take the money out tax-free. Wendy, my favorite pupil. Tell her, you're getting a job with me. Chad, make sure you get Wendy's information. She's getting a job with me. Oh, yeah, another question.
I heard you had said life insurance could be used to pay for your education, and I
Yeah.
wanted to know a bit more about that process.
So are you a parent? Are you a parent?
No,
Okay. Do you have insurance?
I believe so.
You do through your job?
No, through my mother.
Your mom bought it. Okay. So it depends on the type of insurance, right? It should be cash value. Okay. But if there's cash value and you're going to school, hey, by the way, a lot of people don't know this, that when you're filing for your children to go to college, you have to fill out those financial aid packages, right? What they call FAFSA, okay? And most people they make too much money to qualify for financial aid. But the one thing that they don't look at on those applications, and it's not even a question, do you have cash value life insurance? You can have $1 million in your cash value life insurance and $10 in the bank, and you can get financial aid, versus having $1 million in the bank and $10 in your life insurance policy, and you can't get financial aid. Okay? So like in my mind, there's like so many file cabinets of things that knowledge that I built up that things just come out of me. So like the questions you guys are asking are all valid questions but these are things that you're not going to get from your traditional insurance guy because he just wants to sell you an insurance policy, doesn't care really about, and again, I don't want you guys to walk away and say, he told me my insurance guy don't care about it. I don't want that to be the last thought that you hear. But there's so much good information that I can provide. I just want an open mind and the ability to show you what I do. And yeah, you have access, if you have access to cash, you can use that towards education. Tax free. It's a great question. What's your name?
Simon.
Simon? Did he fill out? Yeah. First, I want to ask everyone, did everyone fill out a card because the only way for me to be able to help people is for me to know who you are, right? And if you felt good about what we did here today, I would ask you to fill out an information card, and then I would reach out, or my office would reach out and give you a 30-minute complimentary consultation, either by phone, Zoom, or in my office. So I would highly recommend if we can get, the cards completed, and I know Wendy has another question.
No, it's not a question. I was just
You have a compliment, right? You like the way I dressed
complimenting
today?
so that he would understand the question on the cash value. I used to work with an insurance company back in Grenada, and
She's answering your question as well.
I was just helping to answer the question on cash value. And I left the company and went to another organization.
Yeah.
But then I maintained friendship with some of the workers there. And I learned that the insurance company was going to close down.
Oh, boy. See?
So I went and I took a loan. I knew what my cash value was. So I went and took a loan on all of my cash value
Good.
because I was traveling.
You had inside information.
I hadn't, yeah.
So,
And because I was no, it's my money. It's
No,
my cash
she's right.
value. But because my role in the insurance company was to process loans. So I knew all about the process of the loan for the cash values and all of that. And I took the loan and I went away. By the time I come back, the company was closed.
Wow.
So at least I got my money back.
So I want you to understand that in the United States, that there are certain checks and balances when it comes to financial institutions. Now, back in 2008, during the financial crisis, okay, there were a large amount of insurance companies that took what they called TARP money, and that was troubled asset relief. It was a troubled asset relief program to help financial institutions because if they didn't secure in a person's mind, there would be a run on, like they have like a run on a bank, like the few banks that went belly up in the last year. Because of that program, there were additional checks and balances put in. New York Life was the first insurance company that went to the federal government and said, we don't need the money. You thought we were going to ask for money. We don't need the money. Give it to the other carriers. So there were some companies that got like $60 billion because if they didn't receive those funds, not only would they have lost their ratings, but people would have panicked. And when you, first of all, if you're losing money in your 401k, and then you get a letter from the insurance company that had your life insurance policy that they're going belly up, like that's going to create another, panic. Now, in 2020, when COVID hit, it wasn't a financial crisis. It was a pandemic that created the financial crisis. So people that looked at their investment accounts like, oh, I'm back to zero again, But there are checks and balances above and beyond, and we do our own stress testing. We've stress tested 10 years ago, right after more than 10 years ago, prior to the 2008 and 2009 financial crisis, we stress tested ourselves for 3 occurrences. 1, avian flu, 2, a stock market crash, and 3, like World War. And we predicted that we could maintain our AAA rating of strength even if those things happened, even if the market went down 40%, even if there was a pandemic. And these were things that we were doing already on our own, okay? So there are companies out there that are taking on a little bit more risk than they should, and you will never hear that because they don't promote that. But when you look at our report card every year, which we give out to our policyholders, we only get the highest grades. And another thing happened a few years ago when they downgraded the United States, okay? One of the rating companies went to New York Life and said, we're going to downgrade your financial strength. And they're like, why? Because an insurance company cannot have a better rating than the sovereign company that they're in. And we were like, but we did nothing wrong. We know you didn't do anything wrong. 3 years later, that same financial rating, because we get graded every year, that same financial rating agency came back and reaffirmed our AAA strength, even though the United States that we're in was still lower than our financial strength. And the same thing happened about 6 months ago. See, these are things that you won't hear because people don't talk about the bad things. The sovereign country that we live in was downgraded again because with the debt that we have, 34 trillion and still growing every day, with the debt that we have, we could never pay that off. The interest on that money is $1 trillion. Think about that. So we've been reaffirmed for our AAA rated strength many, many times over. So I don't know what kind of car you drive. I like to use this analogy. You're not buying a Chevy or a Ford. You're buying the Rolls Royce of the industry because that's what you're getting when you do with New York Life. Any other questions? Did everybody fill out a card? You doing it for the kids? Good. No, you're not. You're not older than me. Any other questions? Did you guys feel good about today? Was this informative? Did I give you some good information? I have a couple little giveaways if you guys want for your attention today. You want some giveaways? Oh. If it's free, it's for me, right? I'm not giving away the life insurance. That you have to pay, Wendy. Wednesday morning at 10 o'clock. Yeah, you want to meet Wednesday morning at 10 o'clock. I'd have to look at my calendar. Did you fill out a card? Good. So my office is going to do is my gal My assistant Joan, she's been with me for 10 years. She's my, what I like to call my work wife, okay? She keeps me in check. She runs my calendar. Give some of these things out. Another question, come on. You reached your 100.
My life insurance,
God bless you.
100,000.
Huh?
The company usually send you your money because by then they consider you dead.
So years ago, when the mortality tables used to be at 100, right? Today they're 121. No, wait, let me hear me out. What's your first name? Victoria. So what would happen is when you reached age 100, they call that an endowment contract. The company would give you the money in the contract, which was equal to the face amount, and the policy would be no more. Today we go to 121. Did everybody get a booklet? Of course. You coming up to get it? No. Give me a favor. Give this to, you have more, yeah. These are just tissues and stuff like that. That's going to John, Jay. So January birthday, don't tell me. Let's see, December. Today's the 20th, so I'm just trying to see what zodiac sign that is. It's not Aquarius. Okay. Yes, it is. Happy almost birthday. You're on your birthday eve. Any other questions? We're good? The good news is that
Can the cash value of a life insurance policy be used for other things, such as like starting a business?
yeah.
Or
So I have business owners, I have real estate people that buy large life insurance policies that build a lot of cash. And when they see, like, they do like property rehabs and things like that. So what they do is when they see a property they want, they borrow the money out of the life insurance policy, which doesn't affect their credit. They do their rehabbing, then they sell the property, make a profit, and they put the money back. So as long as there's cash in there, when a client calls me and says, hey, I need money out of my policy, I'm like, okay, how much do you want and how do you want me to send it to you? I don't question what they want it for, right? Like if you have money like at your employer and you need to take money out of like a 401k, they always ask, like, what's the purpose of it? You know, is it a dire need? Is it a hardship? Stuff. They have to ask these questions because it's under some guidelines for the government because it's money, qualified money for your retirement. But when you have a life insurance policy that has cash value, you can do whatever you want with it. Start a business, pay the kids. People call me. Look, I have some people that they've been building up so much cash that now they take an income stream from that money every month to help them support, because they're not working. So when you stop working, what stops? You open the mailbox, there's nothing there. There's no check, right? So they look for those monies to keep themselves going.
So so that money you take out, do you have to pay that back, or what do you do with that
good
money?
question. So if there's cash in there, you could do it as a loan, or you could take it as a dividend withdrawal. So depending on the situation, what I tell people is, if you think you want to pay this money back, do it as a loan, because you can always put it back in. If you take it out as a dividend, then that's lost forever. But really, each scenario is specific, and we talk through it to make sure we're doing it the right way, so there's no real financial impact for that person.
So does that affect your policy in a sense?
It
Because,
will, yes. So if I have a $100,000 policy, as an example, and I've got $20,000 in cash, if I take out the 20, generally you deplete that 100,000 down by 20,000 to 80,000. But let's say that you needed that money to keep yourself in your own world or do something or whatever. It becomes, sometimes the cash becomes more valuable than the death benefit at that moment in time. A lot of people come to me just for the death benefit, so that's the primary focus. But then when they see cash building, that becomes the secondary focus sometimes. And some people will come to me, primary focus is they want cash, but then they have the death benefit, and that becomes the secondary focus. So, like, it really depends on the situation of the person and what they're looking to accomplish.
I was just thinking too, and that's for the young people, because when you take out a life policy, sometimes you get a ride on it, isn't it? Isn't
You
that
get a what?
a ride away? It's another attachment. For example, I don't know if it's on whole life, but I know that on some insurance policy, you have 100,000 life insurance. Correct me if I'm wrong, but you could have a rider in the sense that you have a long-term care benefit or something like that.
Yeah, you're getting into a lot of different
So that's it.
additional things
That you can have.
again, it could have the ability to affect that. That's why we try to work through it when the person just, because those things are done by me. I don't let my staff do that
Right.
because I want to make sure it's done right. What I do is I'll look at it. If I see it's in good order, then I pass it off to the back
Right.
office to
Because the
deal with.
benefit of it is that, like as you age, let's say you want to have a whole, because New York State don't give you anything. When I say don't give you, if you own a house and you have a good pension or whatever, you got to be careful what you're taking from the state. The federal government give you certain things. I'm talking health-wise. But if you have a good insurance with a rider, long-term care, you can use money out of that to hire a home care person and things like that to help you in the home. Because you don't want to take anything from Medicaid at that time because the government will find your
Well,
insurance
they
wherever
ask
it is.
if you have cash value life
Right.
insurance
So
when you go on those subsidies and benefits.
So when you go down and you sit, discuss everything with your insurance provider. They should be able to direct you the right way. And another thing I was saying again about 401k, I know it's good, you have it on your job, but if you can invest some of your money in insurance, young people, it will be better because I was, at 60, they said I was, company got sold over and I decided I'm retiring, I'm not going back to work. And then you realize when you tap it into your 401k, remember, it is tax exempt. They're catching up on you. When you really want the money, you have to pay the taxes.
Yeah,
The
it's
government
taxable.
don't give you anything.
That's the tax later bucket.
Tax, right, the tax later bucket.
That's the one in the middle.
And when I saw, I was afraid to take out some of my money from my 401k because the tax is high.
Just pass it to. That's all right.
Cash value, if you take it as a loan where interest is charged, if you pay back the loan within a year, will the interest be added on back to the
Exactly. Yes.
and then if you don't pay it,
So again, we're getting into like a gray area, but if you don't pay it back, if the person passes away, they deduct that loan and interest from the life insurance benefit, which in a way it's not a bad thing because again, let's go back to the 100,000 policy with 20,000 of cash. I need the cash now because I've got to do something, right? And then I pass away. I got to do the thing that I needed to do with the money. My family's still getting a tax-free death benefit of 80,000.
but will it be just if I borrow 20,000 as a loan, will it just be the 20,000 or will it increase?
So you'll pay interest on the loan, but it's not like a compounding interest. It's what they call a simple interest rate. So let's say 20,000 at 5%. So you'll owe about $1,000 at the end of the policy year.
Is variable or is it constant?
It's variable, but what I'm saying is the rate it's a fixed number. It's a fixed interest rate. Even though it's a variable loan interest rate, it's a fixed, it's not compounding. So you could do the math on it. If I borrow 20, I owe 1,000 at 5%.
No, no, is the interest rate fixed or is it variable? Like if they get a
It's what they call a variable loan interest rate, but it's a fixed number. So let's say it's 5%. You're going to owe $1,000 on the next anniversary.
But if the loan extend, will it always be 5% or is the interest
Once you're locked in on that loan based upon that rate, they generally keep the same rate going forward. The 401k is a little different because if you default on a 401k loan, that's considered a distribution in the year you took that money. Because I've had clients that borrowed money from their 401k and then they lost their job. And if they don't pay that money back within 60 days of being terminated from that company, that's considered a 1099, which is a withdrawal from your retirement, and they have to pay tax. Plus, if they're under 59 and a half, there's a 10% penalty on top of that. So these are all the questions. These are all great questions. You know, you guys are asking me great questions. What? But I see, you know, if you listen to my bio, I was a trainer, sales trainer for 4 years. I trained over 500 agents through this business, you know? And again, I felt good because I was giving back. I feel good being in front of everyone here today because I feel I can give you so much information, you know, because people are looking for good information because there's so much bad information out there, right? Can we agree on that? You're going to stick around, right? You're not going anywhere. Oh. I'm sorry, I didn't mean to put you on the spot. Does any other questions for me? I love this interaction. This is what I live for this. Oh my God, yeah. And what about the people online? Are there people online? No? Okay. They fell asleep? I got to wake them up. Let's go. They're giving away millions of dollars here. Get down right now. 1144 Flatbush. Any other questions? Wendy? Come on. When do you want to meet? You want to meet. I know you want to meet. Good. Hold on. Yeah, again, when we spoke earlier about like what determines the cost or the premium, it's generally based upon a person's age, okay, their gender, and their overall health, okay? And women live longer than men, so when we run a mortality proposal, the women live longer, right? So the life expectancy is longer. Generally, their premiums are less, even if they're older than the person. Huh? I didn't hear what. It's just I don't know. I don't know what it is. From my experience. Yeah, that's right. I agree with you. That is. Yeah.
So,
You younger, my son, he was 20-something when he took us his insurance policy. He and I were the same company. I had him kind of late, so you're looking, he's 33 now. And they didn't even check him. They didn't call his doctor. For me, they put me through the Alzheimer's test and all.
They did. Yeah.
Question me, asking
Yeah.
me, give
Well,
me.
again, the reason for that is because they're looking. We can run algorithms today, right, to determine a person's life expectancy by pulling external information, visits to the doctor, medication use, RX databases, things like that, that we don't even need to invade a person with blood anymore. You know, this is what we're leading to, self-invasive, you know, programs for people.
Quick question, right? Let's just say, like, if my wife is younger than I am, and would it be better for her to take the policy, or I take it because I'm older or I'm a man?
So it really
Because
depends
you just
on,
mentioned about the life expectancy.
yeah, so I always recommend in a household that if we have mom and dad, they each buy policies. And then if we have children, we each get a policy for the children as well. Because the earlier you start, the better the premiums are. And think about it this way, right? Your boy is what, a year now? A little bit more than a year? It's going to be a year, right? So imagine on his wedding day. Picture this, right? That's could be a long way off. You say, son, here's your life insurance policy. You never have to pay a premium on it because me and mom took care of it for the last 25 years. That's the gift that keeps on giving. Yes, by about 1.8 years. What are they going to? They're gonna get you when you get out of the building today. Is that what's happening? Any other questions? I appreciate you guys' time tonight. I really do. I think this was. I think this is as good for me as it was for you. No, I feel great. You know, I feel great, and I feel like being able to share. You know what we do. The people that don't know us, but now you do. You know, and even if we don't do business together, if I'm walking down the street and I see you, I can say hello. Okay? But take me up on my offer. My offer is this: 30-minute consultation, complimentary. Give back if you have the card, if you filled it out, or you snapped the picture on the popple. I mean, I'm here for you guys. Oh yeah, we go individual. Yeah, we take a process. Yeah. What? Oh, she already got it. She already got a card. Yeah. All right, I'm good. Yeah. You good? Yeah, just here's what we're gonna do. We're gonna throw everything. We're gonna. Good. Good, right? We'll go. Oh, am I still on this thing?
I thank you very much for being here. It was very informative for me. I have it already, but there's still some more stuff I've learned. So I have to pull him aside and talk to him about that. You know, he never told me about that. But that's all right. Yeah, honestly, he's been, I put it like he's been a friend, to be honest. That's what it's been to me right there. He's been a friend to me. And being a friend, I really look out for you. I will really keep you right here, keep him right here. You know, he's been to be a friend to me and my family, and I really hope that he's giving you some information that he can go back, look into, maybe can help you out, and because it's something I really think a lot of us really never really thought about, you know, and it's very informative, very helpful. And Mr. Andrew, sir. Mr. Andrews, I would like to officially give you thank you for being here tonight. No problem. It's a pleasure to have you here. I'll also just give Eddie other thanks also for introducing you to me. And maybe next time, maybe summertime, we might do this again when there's people who's more outside, you know. Yeah, that's fine. Because I think in the cold weather, because I thought about like, do we really want to still do because of the weather? But you know, you're still here. We did what we have to do, and a lot of people got the information that they needed. And it was great. It was really great having you guys here. Thank you very much. Thank you very, very much. Same here. Pleasure, pleasure. Yes, yes. Thank you. All right, so can we just stand us a quick word of prayer to close this off? All right, let us bow our heads to give God thanks. Father God, we thank you for bringing us here where we can learn more and where we can help each other, dear Father. We pray, we thank you for Mr. Andrew and his team, dear Father. We thank you for blessing them, for bringing them here, where we can get this information to be more educated, dear Father. As we go through this week, as we go through life, we add to the business in a special way. Grant us safe travel and mercy. In Jesus' name we pray. Amen.